Well, hey, welcome back to Rate Ready Radio, the podcast all about real estate and mortgages. So today we are going to be talking about down payment assistance. How do you get funds to buy a house? And I'm joined today by Natasha Dykes, one of our team members here.
Hi, guys.
And so today we're going to kind of get into this detail about money and where it seems to be the biggest problem in regards to being able to purchase a house. Besides payment, money is obviously the next step. And so I want to talk a little bit about, what's available, what kind of programs are available, and kind of how do we get into people getting qualified for these things?
Yeah, it's pretty awesome with the different programs that they've come out. I mean, for a long time, we only had SHIP. And now then they started coming out with the bond programs and, of course, Hometown Heroes. So they've definitely come a long way with making sure that there's a lot of stuff out there for our buyers, which has been huge.
It's really cool. And the SHIP program, for those who don't know, that is a local grant type program.
Yep.
Most counties have some kind of a grant type program.
Yep, each county
in the country. And so it'll depend on each individual county of how much they give. We're in Lake County, Florida here, and in Lake County, they give anywhere between $20,000 and $40,000.
I was going to say, yep. I had a customer not too long ago. I think she got about $40,000.
Yeah, that nice. Actually makes a dent. That makes a dent.
Yeah, that made a huge dent.
So what's the negatives with the SHIP programs, the county programs?
The income requirements are a tad bit lower than, for example, the Hometown Heroes, and possibly even the bond program. So you've got your medium income people, and again, people might not qualify because they make too much money. The other thing is, when you're talking $40,000, remember this is going to be a second mortgage because that's what a lot of the down payment assistance programs act as. So when you're purchasing a home, it's not to say that getting the down payment money isn't amazing because it goes towards your down payment, your closing costs. Heck, it might even be able to go to some repairs, maybe a new roof, which is what my last customer did. But again, it can be a second mortgage against your home. So my customer that happened to get the $40,000, she plans on being in this home forever. And that's going to be no problem for her having that $40,000 second mortgage out there. Because she bought the home at market value. Now you got the $40,000 second mortgage. But she got a new roof. She did a good chunk on her down payment, covered all of her closing costs. She was super resourceful. We even got a lot of utility deposits waived. She was literally probably one of the most resourceful customers I've ever met. So she was pretty awesome.
Well, one of the neat programs, though, about that second mortgage is the forgivable second mortgage.
Correct.
So as long as you
SHIP.
stay in the house for 10 years, you don't have to pay it back.
Correct.
It's free money.
Yeah.
And so we've helped quite a few people do that. I've helped people along the way that probably had no chance of really getting into a home. And now they've already used that as a step up because they stayed there 10 years and got that free money. So it's the county programs, they're fantastic programs. They give you ample money in order to purchase, and it can be used for down payment. It can also be used for closing costs and the escrows and all the fees that are going to be involved in purchasing a house because, of course, it's not just down payment. But you've got to be careful to, like you said, they are income restricted, they're area restricted per county. And you've got to make sure that you meet all of their qualifications, which are usually a little tougher.
Yeah, they are a little tougher, but I was going to say affordable housing, when they're being a little bit more conservative or tough, it's really in the consumer's best interest. I mean, they're looking out for the consumers because they want to make sure they're not putting them in a position that they won't be able to make the payments.
Right.
So it's all really in the customer's best interest.
And it's usually a little bit higher credit score. And then when you get into debt ratios, which is the qualifying ratios for a mortgage payment versus income or your installment debt and revolving debt,
they're a little more conservative.
Little tighter. So those are some of the things to remember. And, of course, the big requirement is first-time home buyer.
Correct. Yes. And they require you to go through the classes, counseling, and do everything as far as the loan program goes. And then they put you on a list. Just like a lot of the other government programs, there's only so much money that goes into, I want to say, the kitty, and they distribute it so often throughout the year. They actually distribute that money more often, I think, than Hometown Heroes, because I know when we get into Hometown Heroes, we'll talk about how that kind of runs out of money pretty fast. But so affordable housing continues to distribute money. It's like a statewide thing, actually. Correct. Well, count statewide as far as the whole state goes. Yeah,
Right.
they
And for
continue
each
to.
county, they get an allotment of a certain amount of funds.
Yep.
Yeah, that's ever so true. And so you had mentioned Hometown Heroes, which is
Yes.
one of the parts of the Florida Bond Program.
Yes.
Which is another type of down payment assistance program. And so let's talk about that a little bit, because there are some different nuances of the Florida Bond Program. There's standard bond, there's the assist bond,
Yes.
and then there's the Hometown Heroes. And some people, especially in Florida, have been getting a lot of information on Hometown Heroes, and it tends to run out of money extremely quickly.
Super quick. And then whenever you have the fallout, and that's some of those customers that were going to buy a home, got the down payment assistance from Hometown Heroes, contract didn't go through for whatever reason, that money's gone within seconds. So
Yeah.
it's pretty quick. We've actually got to make sure we stay on the ball when the money comes in and have a great loan officer whenever the money does come in to make sure we snag that money up.
Yeah, they usually start in July with the funding for Hometown Heroes, and last year it was started at $100 million.
Gosh.
And if I remember right, it was gone by the second week in September.
I was going to say, yeah, it was pretty quick.
It did not last very long. And you would think $100 million does, but it does not. And they give you 5%
Yep,
of the
up to
sales
5%.
price, and it's the same thing. It's a second mortgage.
Yep.
Right.
Except that one does not go away.
Right.
Yep. So the ship obviously is kind of one of our favorites
Sure.
because that one does go away, and it can be nice to have that money alleviated as that second mortgage after 10 years. But the Hometown Heroes does not. Again, though, still a great program, and their qualifications, I think, are not as strict as the
The
ship.
credit score requirements on the Florida Bond Program, Hometown Heroes, are 640 credit
640.
scores. Yeah, which is the same as SHIP, I believe.
Yeah, it is. Yeah.
Yep. And so there are still some of those requirements. They are more lenient on the debt ratios.
Correct. Yep.
And they are definitely an income restricted loan. And the benefit of the Hometown Heroes program is the way it started a couple of years ago was for first responders. That's
Yes.
what it was created for. It was set up for our firefighters and police officers and nurses and everybody on that front line that we so much appreciate here.
Yes.
And that's what it was created for. And it kind of evolved into a program where if you worked for a company that was brick and mortar based out of Florida, and you worked for at least 35 hours a week, which would be considered full time for them, then you were qualified, you were eligible, I should say qualified, but eligible to apply for the
money.
Hometown Heroes program. And so they did some of those changes. I don't know if that was good or not.
I definitely am thankful for any down payment assistance program to be able to help any of our consumers because, I've been in the business for 27 years. You've been in the business for
33.
And it's amazing to be able to help these customers get into these homes. So I don't want to take away from continuing to help all of our consumers.
Correct.
But I will say I feel bad because the money did not, prior to them switching it over to a brick and mortar corporation in Florida, it didn't run out as fast.
Correct.
And so it was more available for all those frontline people.
Yeah.
So that made
that
it
was
nice.
my take on it too. I was kind of
Yeah.
like, well, you kind of took away, but again, they didn't run through it as fast. Maybe that was the thought behind it.
Yeah.
And so again, like you said, I'm grateful for it as well. But I would have liked to have seen the first responders be able to retain something.
Well, that
or maybe
and,
split it up, 50 million each or something to that effect.
And just to have something that's special for them, because look how many special things they do for
Correct.
us.
That's correct.
As far as how much they put themselves out there. I mean, we could even go back to the nurses whenever COVID happened. I mean, again, frontline people that were doing everything they could for the consumer. So that was nice to have that for them. But again, I'm definitely want to help every consumer we can.
Yeah, for sure. And then Florida Bond has the assist programs. They have two different types of programs with second mortgages where you can have a payment or not have a payment.
Right.
But I believe both of those programs are $10,000.
Yes.
Is what they max out.
Yes.
And so the borrower can still get $10,000, which isn't generally going to cover everything they're going to need. Not without a lot of help from the seller. Right? But
it's a good
it
chunk.
should be in a position where it does take a good chunk, or maybe all of their down payment at least.
Yeah.
And so those programs are all available, and there's additional programs. And depending what county you're in, what part of the state you're in, or what state you're in, you should definitely look into any kind of a SHIP grant or any kind of a bond program for the simple reason that it will assist getting those down, getting those mortgage payments down.
And it helps, like you
It
said,
does.
with the down payment, it helps for those people that maybe need a little bit extra help in closing cost, or, they may have some items that they need to do in the house when they get in. Let's say the house is safe and sound and it does qualify for your regular government loan, but you take that 10,000, you may have money in the bank that you could cover your closing costs. You use that 10,000 to cover your closing costs, so you have money in the bank to save, and you can now put it towards whatever you need to when you get into the house.
And these programs, most of them require some kind of an education to go through. You have to go through counseling, education for being a homeowner, especially since you're a first-time buyer. All these programs are first-time home buyer programs. And so they're going to give you the education that you need, not just from us, but you're going to hear it from other people as well when they talk about budgeting and they talk about debt ratios.
And just a general census of how to be a homeowner, because there's a lot of responsibility when you go from renting to homeownership. I mean, it's huge.
Yeah,
so.
exactly. And that's some of the position you have to remember, that when you're purchasing a house, it's not just a mortgage payment.
Nope.
Right, it's the repairs that come along.
The roof,
with
it's
the
the
roof
water
and the
heater,
AC and all the things that come about.
It's now yours.
Exactly, no more landlord problem. It's now your problem, right? So these are some of the things that those counselors and the classes have, and I think they're fantastic. I think every first time buyer should have to go through that. I'll get flack for that, but I still believe that on first time home buyers, and we do a lot of first time home buyer business. Unfortunately, right now in the market throughout the country, the first time home buyers have been priced out. I heard a statistic today that it's down to less than 21% of all buyers right now are first time home buyers, and that is extraordinarily low. And so we've got to get that turned around. We're hoping some things will change here relatively quick regarding interest rate and qualifications. So we're working on towards some of that. But to not have to worry about coming up with 15,000, 20,000, 20%, which is a big thing, right? Oh, I need 20% to buy a house. No, you don't need 20% to buy a house. There are so many different loan programs available between FHA and if you're a veteran, thank you for your service, and the VA loan at 100%,
USDA
and USDA. And that was the one I wanted to talk about because if you get yourself in a position where possibly you don't qualify because of income restrictions, you're over the income limits, or maybe your credit score is just slightly under 640, but it's over 620. You get yourself in that position where
you can't get the down payment.
You can't get the down payment assistance. There are programs out there such as USDA, and I want to talk about that just a little bit too, because to me that's like a down payment assistance program.
It is, because it's 100%. Again, like you said, the VA is 100% as well, but they don't have monthly PMI. Right. The USDA is 100%, and they actually have a smaller amount of PMI. Correct. So I think that their PMI is pretty affordable.
Yeah, one of the amazing things with USDA is it is the only loan program in the country that will allow you to finance loan amount up to the appraisal.
Yep.
Which means you can actually finance your closing costs.
Yes.
You can physically come to the table with absolutely nothing.
Yep.
And purchase a home.
Yep.
And these are on fixed rate loans. Their current rates, there's nothing drastic. Right now they would range somewhere between 6.5% and 7%.
I was going to say it's actually a very attractive interest rate. I mean, because it's a government loan. So I think that they're great. Even if you don't have the great 720, or above credit score, you can have a 640 or a 680.
Correct.
And still get a pretty competitive interest rate with the USDA.
And you're in a house, you're in something that you own, that you're building equity into, and that's some of the most important things. You look at the markets today and you look at rent versus mortgage payments, and mortgage payments are high. We're not going to hide from that. They're high. I haven't seen so many first-time homebuyer mortgage payments with a 2 in front of it.
Yes.
I've seen this last, say, 16 months. And it kills me to do that for a first-time buyer. It's just absolutely killing me to do that. But there really is no choice. But it's still better than renting.
It is.
Because you're still gaining equity. And if you get in now, you have the opportunity to earn that equity rather than somebody else, like a landlord, and you're paying just about the same amount of money, if not more, on rent.
Yeah, because the rental prices, I mean, gosh, I was going to say, again, another COVID thing, but, with the demand, the rental prices increase. So it did put you up there, in the price range of paying a mortgage payment. So, I mean, if you can qualify yourself, you might as well be paying into your own equity. And
correct.
Also look forward to the appraisal value increasing over time.
Right.
You don't want to get into a house and think that you're going to make $1 million in a year or two, but having that equity be there over time for those people that are there for the 5 years or the 10 years, it's great. And then you use that money when you go to sell your home to put a greater down payment on your new home.
That's right.
Or pay off some bills. I've got a lot of people right now that are bought homes. I mean, we're dealing with one now. I think she bought this home 7 or 8 years ago, did a refi with us 3 years ago, and now she's selling and buying, and she's got, a good chunk that she's taken from the equity of her home. It's about 80 to 100,000, putting it into the new home.
Mm-hmm.
So,
yeah, and that's the most important thing to remember, that you have step up mortgages, right? So you start in your first time buyer, and the mortgage company you deal with. If you come to Mortgage Financial Group, we're going to guide you in saying, okay, you're a first-time home buyer. This is what we would recommend, and we're going to give you options, obviously. But this is what we would recommend you do in regards to wanting to keep your payment as low as possible or limited cash, depending on your scenario. And if you come to us and you're buying your second house or your third house, it may be a different conversation we're having, right? It might be
depending on the
different
time
conversation.
frame. Yeah,
exactly, because it might be your final house. Maybe this is the one that you think is your forever home, and so your closing costs and the way you look at things from a financial picture should be different.
Yes.
Than when you're a first time home buyer, because a first time home buyer
You need a little
averages 4 to 7 years in their house. That's what they average. If you get down payment assistance, keep in mind you've got to stay 10, especially on a SHIP grant program, because otherwise you're paying all that money back.
Yeah.
And when I say all the money, I mean all the money. It's not, they don't discount it.
But it is nice because it's at a 0%.
It is nice. There's no interest attached to it.
Yep, no interest attached to it.
I did have one many years ago. We had a Lake County SHIP loan that we did, and I had one. It was $25,000 that they had done. I did not do that in mortgage. They came to me for a second house, a step-up mortgage, and we went in and realized that they were 9 years and 200 and something days from their second mortgage being forgiven. So we had to delay the mortgage, the new loan.
Yeah.
We had to delay it until the 365 days was up, so that we got to that 10 years.
They were 9 years. Yeah, they were into that.
And the seller worked with us, and everything worked out okay. But it was interesting because they do not move. It's no budge.
No, and I was going to say they got to cap it somewhere. So,
right.
And again, it's understandable because they don't want you buying these houses and flipping them. They want you to truly treat it like a home.
That's correct.
I mean, first time home buyer programs is there for exactly that, not to necessarily be an investor and flip it in a year or two. But, 10 years is a good amount in a home. I mean,
great time.
There's been a lot of people, I know that stayed in home. Gosh, I do loans for people all the time, 28 years or 20 years.
Well,
so.
10 years gets you, if you're starting a family off as a first-time buyer or a couple, you're starting a family, you get 10 years into that first house to get some, maybe a child, and then through elementary school.
And look at all that equity you just gained in that 10 years that you're going to be putting
Plus you gain the down payment that you don't have to pay back.
Yep, that you just gained,
So some of that stuff, how do you find the programs? Are there websites that are out there that you can find?
Well, I was going to say, come back to a great loan officer who can do the research for you. But yes, I'm sure there's research online, but definitely your loan officer is going to be a huge advocate to help you and get you started and educate you with everything. The way that I like to start off all applications, just got a call today, is here's what I like to do. I like to go ahead and get some basic information from you. Let's start off with your name, your address, social security number, date of birth, employment info, residence history, and let's just get some good information, and then start off with a soft credit pull, which is nice that Mortgage Financial does that. We don't hit you where it hurts with your credit. We want to do that soft pull and dig in, and then it's going to go by your credit score, your debt to income ratios. It's going to go by how much money you make. Each program has levels of income. They don't want you to make so much because, again, first-time homebuyer programs are for people that don't have the ability to put that much in. So it's going to be the lower to medium income people. So we dig in. And by the time we dig in, like you said, we can say, all right, you're eligible for FHA or conventional. And then it's going to be that second mortgage. That's going to be the government down payment assistance program, and go from there.
Yeah, so
just kind of dig in.
Every file is different. Every time we talk to a client, there's no two stories that are ever the same.
Yeah.
In 33 years, I don't think I've ever had the story the same. And you look at it from a standpoint of, your budget as a borrower. You know your budget better than anybody. And at least you should.
If not, we'll help you. We'll help you understand
better than anybody. Yeah. And so What we can do is we can offer options. We can offer ideas. And these are the best things for you. And one of the things, and we've talked about this on a previous podcast, one of the things we try to do is to make sure you understand that it's not necessarily the payment you qualify for, but it's the payment that you want.
Yep.
And what I mean by that is you may qualify for a $3,000 payment.
Yep.
You may only want two.
Correct.
Well, that's then part of your budget, and we need to try to work into that scenario.
And I love that and
explain
respect that.
why. And they give you the options with the different loan programs, especially with a first-time buyer, because there are a lot of different options. You don't have to just settle on one option and go with, well, you have to do it this way, because there are so many options out there.
Yeah, I actually just had one we just got. I think we're pretty close to clear to close, but she qualified for $300,000. But when we talked about payments, she wanted more of a $150,000 home, and we ended up meeting in the middle. And she's now purchasing a house for $222,500, and so that just gets her the payments a little bit more than what she originally started off with wanting. But it's something that they can afford and she's comfortable with. So again, just because I tell you qualify for $300,000 or whatever it is, again, all respect out and hats off to you to make sure you get in what you're comfortable with.
That's
and
right.
I definitely respect it. And that's what we do. We go over that budget because a lot of times people, it's the payment, the monthly payment.
Correct.
And that depends on not just the purchase amount of the house. It depends on the homeowner's insurance for the type of house you're getting.
How old is it?
Yeah. Or is it a mobile home?
Yep.
Also, it depends on the property taxes. That's just a whole bag of worms you can get into because the property taxes may not be expensive right now. But I also like to go into it with customers and say, okay, this is the property taxes today.
That's right.
This is your mortgage payment today. But the person that bought it before you, that you're buying from, they may have bought it for $100,000 and that's what they're being taxed on. You're buying it for $275,000.
Yeah.
So let's get into each county's website because they have the tax estimator. And again, we're going to qualify you for that payment today. But I'm going to forewarn you, hey, this is what your payment's going to be going up to in about a year from now whenever the tax collector reassesses it and gets you where you need to be. So it's not just about the purchase price. It goes into all the other things.
I think that's one of the things that has you stand out because I've seen you work with clients and the care and the time that you take with each client.
Oh, thanks.
It really matters. And they understand that and they appreciate that. I've had a lot of conversations with clients that you've helped. And
thank you.
It takes patience because we have to make sure that as a first-time buyer especially, you understand what you're getting into.
Yeah.
It's the biggest investment of your life to this day.
Totally.
Right?
Yeah.
You're talking about financing $250,000, let's say. I mean, that's not small change, right? We're not talking about buying a used car for $10,000.
Yeah.
And
that's going to be over 5 years. You're talking about a quarter.
That's right.
And then over 30 years, a big difference.
Yeah. And you've got to know what you're doing. You have to have knowledge so that you can make informed decisions. And that's what has to happen with your mortgage company.
Yeah.
That's what Mortgage Financial does. That's what you do. That's what we try to strive for, is to make sure that we educate as much as possible so that the buyers are comfortable. And by the time they go to the closing table, the questions are gone.
Yeah. They're just signing. I mean, that's what we do. I mean, of course, with all of our customers, John, we call them up a couple of days before closing and I spend, 20, 30 minutes going over all the closing documents that they're going to be signing because, I don't want a typo. I don't want any questions. I want them to be happy. It's an exciting day. So it's huge. It's huge.
Yeah, there's nothing better. There's no better feeling in the world, at least to me, of going to a closing table for a first-time home buyer, watching them sign and seeing them smile.
Yeah, because it's a huge achievement. It's a huge achievement.
It is. It is. It's not easy anymore. It's not easy to buy a house. It's not for the faint of heart,
no.
if you will.
Well, and you get different clientele. I mean, you get, customers in their 20s. I just got to, what was it, maybe about a year and a half ago, helped my best friend's son, we did, purchase his first house. And I want to say he was only 20, 21. Yep. And because of her due diligence as a parent, he had a great credit score. And
she did a great job.
She did do a great job. And he had money in the bank because they did a prepaid college fund. Yep. And he did not end up using his college funds. So they were able to turn that into his down payment and closing cost. And he was set up and it worked out great. That was a really cool moment.
Yeah, I bet it was. It was. It was, this is what we do.
Yeah.
All day, every day, we do mortgages.
24/7 and on the weekends,
We live it.
Yeah, we do. And I'll tell you, that's one of the greatest things I got from coming to work for you, I think 7.5 years ago. I did banking for 20 years, worked at some great local hometown banks, had a great career, but had some different things in my life change. And I got to come work for John, and it's been an honor to work for you.
Thank you.
This guy right here runs circles probably around all of us loan officers. We joke around that he probably knows what we're asking before we even ask the question. And we're probably...
That's just experience. That's all that is.
Well, we're definitely the reason why he goes crazy and gets gray hair. But there isn't a time that we don't need something. It could be, 9 o'clock on a Saturday night and I'm talking to a customer. And unless he's asleep or at an event...
I don't sleep.
No, we probably don't. We do. We have the opportunity to give our boss a call and just run something by him. And he may not be able to give me that answer right that very second, but he's doing the research. And after church on Sunday, he's probably getting back to me. So I'm grateful for working for you. It's been a real honor.
I appreciate that. I really do.
Yeah.
I really do. Well, it's time to just kind of remember as buyers, that any buyers that are out there right now, now is the time to buy.
Yes.
Don't let the rates scare you. We've had, again, other loan officers on here. The phrase is out there: marry the house, date the rate.
Yep.
We know there's going to be a refinance market coming. It's going to happen.
Yeah.
We know this. The rates will come down eventually. When? I can't tell you that. Nobody can.
No.
We have ideas. We're hoping. But right now is the time to buy, because if you purchase a home now, even with a little bit higher rate, if you're in a payment that you can make,
something
even
that
though
we
it's
help
not
you.
quite what you wanted to be, you're going to be able to get out of it in the next 12 to 24 months.
Correct.
You're going to be able to get into a better position in the next 12 or 24 months, and you will gain the equity of the next 12 and 24 months.
Yeah.
And that's more important than when the market does finally shift and it becomes a seller's market, because there's less houses and the prices are going up again. And now you're fighting for every house you're putting offers on. And we're back to a market where you're putting 14 and 15 offers out there on houses, trying to find one.
Yeah.
So now's the time, guys. Now's the time to purchase a house. So get off the fence. Come to us today. We'll get you in before Christmas.
Well, and then, exactly. Merry Christmas. But, the thing is you see these buyers, and unfortunately they have had some regrets, and, they've tinkered with it and, gotten frustrated and then, got disappointed or discouraged, but it's okay. We keep going.
Yep.
But if you find that right one, do it. Do it, because there's never no time like the present.
That's right. That's absolutely right. That's absolutely right. Well, Natasha, I appreciate you coming on today, talking about this a little bit. Remember that, call Mortgage Financial Group.
Yep.
We will be glad to discuss any options with you, any down payment assistance programs that are available to you. We're available to you 24/7.
Yes.
You've got our number. And we just look forward to working with each one of you at the best we can for questions and just getting into houses. Again, thank you, Natasha, for being part of us.
Thanks for having us.
For the next time, we'll see you soon.